Hey, it's Eric Osnes from Homebridge Financial Home Mortgage, giving you my weekly update on mortgage rates and things happening in our financial world for the week ending December 10th, 2021. Well, feels like 1982. The big financial news this week was the Consumer Price Index, CPI, came in smoking hot, up 6.8%, up 0.8% from the prior month. The core reading for CPI, which strips out volatile food and energy prices, came in up a half a percent at 4.9%. Rents rose a half a percent, rising to 3% from 2.7% year over year. Rents would probably be even higher, but rent moratoriums, eviction moratoriums have kind of kept that in check so far this year. Otherwise, our CPI numbers would have looked even worse. These are the highest inflation readings since 1982. Man, I had hair in my head back then, a long time ago. Will these red hot numbers force the Fed to tighten more quickly? There is talk that the Fed, the tapering of their purchase of mortgage and treasury securities will be accelerated, doubling from $15 billion a month to $30 billion a month. At that pace, tapering would end in March rather than in June. After that, a rate hike by the Fed would sort of be the next move to, combat inflation. The Fed has to be careful. If their actions are too severe, it'll thrust us into a recession. If they're not enough, inflation could get even worse, leading to a much more painful remedy, as we did experience in the mid 1980s. The next Fed meeting is next Wednesday, December 15th. They meet 2 days, Tuesday and Wednesday. They'll be making an announcement on interest rates on Wednesday, so we'll be watching with bated breath to see what they have to say about that. I suspect that they will double their tapering to accelerate the ceasing of their purchase of mortgage-backed securities, which has been artificially keeping mortgage rates low since the start of COVID. For the week, mortgage rates ended relatively flat from last week, still historically excellent. There's the national average for mortgage rates for this week. Conventional 30-year fixed rate loans are at 3.21%, up a little bit from 3.18% last week. 15-year fixed rate conventionals unchanged at 2.55%. FHA and VA 30-year fixed rates 2.91%, up a little bit from 2.87% last week. And jumbo 30-year fixed rates just down a tick at 3.12% compared to 3.13% last week. In other news, let's talk about locking your rates. Most lenders will not allow you to lock in your interest rate until you are in contract to buy a home. That can mean stress and also trouble if rates keep rising during your home search. You could end up, of course, with a higher monthly payment or possibly even no longer qualify if you're already searching at your upper limits. We have a solution for that. It's called Lock and Shop. Lock and Shop works like this. You can lock in your interest rate before you found a home for 60 days, 90 days, 120 days. You can lock for up to a year. So you're protected from rates rising. So you've got that peace of mind. And if rates happen to fall during your search, you can, if they fall prior to closing, you can float down. Should be able to take advantage of a lower rate, if that were to happen. There are some conditions and rules. We're bankers after all. And Lock and Shop is not available for all loan programs. It is available for most of our conventional FHA and VA and USDA programs, but not necessarily for jumbo loans or some of our more special programs. So I'm available to help discuss these and other strategies to help you sort through all these complexities of buying a home. Just reach out. You reach me, Eric, at ericismybanker.com. Call me anytime, 206-915-3742. Be sure to listen into our radio show. We're on every Saturday at 2 and Sundays at 3 for a repeat performance on AM 1590 in our Seattle markets. You can also catch us on podcasts. Just search Open House with Team Reba. You'll find over 250 episodes on our podcast. Well, that's it for this week. We'll keep our fingers crossed for next week. I hope you all are having a great holiday season. Have a great weekend, and we'll talk to you next week. Thanks again.